Hello guys and welcome to this new video. Today we'll talk about the S&P 500 hitting record highs, news, charts and also fundamentals. Why is it going up when the other stocks are going down, when the other stocks are stable? Before we go deep into the charts, let's quickly set the fundamental context behind the S&P 500. The index is trading near record highs, driven mainly by a small group of mega cap stocks like I was saying. Nvidia is around 2%, Apple close to 1%, Microsoft about 1.5%. These companies alone represent a significant percentage of the S&P 500 total market capitalization. This is very important and you should really note this. At the same time, market breadth remains weak. Less than 20% of stocks are meaningfully advancing, which tell us this is not a broad rally, it's a concentrated one. On the macro side, volatility remains suppressed. The VIX is down roughly 4%, while gold is slightly higher by 0.8%, suggesting investors are still calm but selectively defensive. This combination, strong index level, narrow leadership, and low volatility, often creates an environment where price looks strong on the surface but risk builds underneath. That's why fundamentals alone are not enough. They are not. To understand whether this move is sustainable or fragile, we'll also need to let the charts speak. Now let's move to the charts and break down what price is actually telling us. Looking at the S&P 500, let me remove this one first. Looking at the S&P 500, we can clearly see a big uptrend since April last year. So people who decided to buy here are now sitting, they are not actually stressing like people who are actually trying to buy because they're just waiting the price to decide whether it will break this trend or not. When we look at the chart, like I was saying, we can clearly see an uptrend, very simple. You can clearly see, and the market is describing what we can call a triangle wedge. So based on technical analysis, people are still observing or are waiting for the price to either break higher or break lower. But based on fundamentals, only three major stocks are moving, which are Apple, which are Microsoft, and also Nvidia. But the problem is the majority of other stocks stay flat. For example, when you look at VIX, you can clearly see that VIX is under a moving average, the 200 moving average and the 15 moving average. This means that the market is not just P500 because of the structure. It's very beautiful. You can clearly see support and supply. You don't have many wicks. You don't have, how can I say, a lot of liquidities that will trap you. No, it's very beautiful. But since we know that it's controlling almost 500 stocks, we want to know why people are still shaking around this price. Recently, it hit the all-time highs, near almost 7,000. So why people are not continuing to buy? Why they are still saying price might go down? Because the price have been moving only based on three major cap stocks. The rest are just lower. For example, if you closely see VIX, on the 15 and 200 moving average, the price is down 4%. So when we come to the S&P 500, it has been growing since April last year. So the price might be exhausted. When we draw a trend line, you can clearly see that the price have been eating this trend line multiple times. One here, here, here. So people are asking themselves, is the price overloaded? Is AI just because the recent news are saying people are buying AI a lot. That's why the price is going higher and higher and higher. But investors are waiting. They are waiting for something. When we have this new trend here, we can see the price is thrown between a beautiful triangle wedge. So people are waiting if the price will break this level and continue higher or come down here and break this level. But the market works with liquidity. So let's zoom to the 4 hours time frame to see where the liquidity lies. On the 4-hour time frame, we can clearly see a lot of liquidity. All this liquidity are market driven. So price might come down here, collect all this liquidity before moving higher, or collect this liquidity and going down, because remember, major stocks are not moving in the same trend as S&P 500. So the price might collect this liquidity and create a continuation. That's why investors are waiting for the price to either go up or go down. But the major price action that we might really focus on here is this level, this one. Because if the price break this level with big momentum and retest and break here with a big momentum, there is no way the price will go higher. This is a probability, not a prediction. Remember, if the price break this level with high momentum, you might continue to go down before taking some price, before breathing and taking some price and continue to go higher. So that's why people are watching the S&P 500 based on the beautiful triangle wedge, and they are assuming that they have to wait either the price will crash or continue. Yes, the same thing apply also to the Nasdaq, because remember Nasdaq and S&P 500 are correlated. They are friends. But when you're a day trader, you don't want to know this, because sometimes it might tell you to buy, to sell, and you follow. You just say because the other one move, you assume that it will also move. A good trader doesn't follow this kind of logic based on correlation, friends, trend, and everything. But long-term trader do. Long-term traders do, because Nasdaq have been moving the same way. Because when you see this trend line, you remember on the S&P 500 we have a similar trend line, price hitting multiple times, also price hitting multiple times. Here also we have a beautiful triangle wedge. So the question here is, who will follow who? So when we see this, we can also decide to wait. And it's a good skills, because in trading, the rewards comes from patience. If you're in a hurry, you might hit big losses. But if you wait for confirmation, if you are sure that right now I can put almost 5% of my cap here, you are sure that based on your analysis, you know where the price will go next. So people are waiting, investors are waiting, and they sure do, and they have a good reason, because the price hasn't decided yet either it will go higher by breaking this level or go down. The difference with the Nasdaq is it hits on last year the all-time highs. So right now the price is just consolidating inside this triangle. It's the same with S&P 500. The price is consolidating inside the triangle. So based on news or based on AI explosion, or I don't know which stocks or will decide whether the market will go, we will see if the price crash or not. So when we put everything together, guys, we can clearly see the picture. Fundamentally, the market is supported by strong mega cap leaders, but participation remains narrow. Technically, S&P 500 is still in an uptrend, holding above K support while approaching an important resistance zone. This is not a market to chase blindly, like I was saying. It's a market that rewards patience, level-based decisions, and discipline. The key questions now are simple, and they are very simple. Are buyers strong enough to push through resistance volume? Or does the market need time to consolidate or pull back before the market have his next move? Like I was saying, either breaking higher the triangle wedge to go higher or going down. How you answer those questions should define your risk management. Very important, not headlines or emotion. If you appreciate this kind of analysis, guys, where fundamentals set the context and charts guide the decisions, make sure to subscribe, hit the follow button. I'll be sharing regular markets breakdown focused on structure, price action, and realistic trading insight. Thank you for watching.